Obviously, we've just come through quite a significant moment for the regional banks in the United States,
Yeah.
but also rising interest rates, recession fears continuing to play out.
Yeah.
How are you seeing the growth trajectory from this point on in this context? Because clearly a lot of worry about the banks and bank balance sheets now.
Yeah, I mean, look, there are lots of things going on. On the one hand, yeah, of course, inflation has remained stubbornly high in the U.S., which has caused interest rates to go up another 25 basis points. Maybe we're done for now, although I think we have to see whether the Fed can really get inflation under control. But that will have a slowing effect on the U.S. economy, for sure. And we know that the biggest interest rate increase in recent memory will have effects that are both understandable and understood in advance, but also unknown. And the second, third order impacts on the U.S. regional banks would be one of those. But this is kind of all what we expected over the past year as we had this period of heightened inflation. And we'll see from here. Now, the other side of the equation is China and Asia are still growing quite strong. They don't have the same inflation problem. Of course, Standard Chartered Bank operates across Asia, Middle East, and Africa with a very, very important footprint in China. So we're hopeful that the rotation of growth away from the U.S. and possibly Europe, which are inevitably slowing, ideally not to the point of recession, but we'll see. It'll be close, one way or the other. We'll rotate through to China and the rest of Asia, which are on a post-COVID upswing. So all in all, we feel pretty good about the state of the world.
Do you think the Fed pauses from here?
I think the Fed will definitely pause from here, but I think they have to see whether those inflation numbers really come down. Now, the fact is, job growth is still pretty strong. Wage growth is still pretty strong, and that's not just in the U.S. It's in Europe and the U.K. as well, as in many other parts of the world. So if we can get the regular wage growth cycle back under control, then I think the Fed can stop here. But it's not done yet.